Okay, for this video tutorial, I wanted to cover the IRS Form 2555, which is a foreign earned income form, and this is generally used with your 1040 to claim the foreign earned income exclusion. Okay, so I have the form in front of us, and then I have a slide here with some background information on the form itself and who can qualify, and then the fact pattern we're going to use. So I'm going to run through this first, and then we'll jump back to the form. So what is the foreign earned income exclusion? Well, if we go to the tax code in section 911, it states that a qualified individual can exclude from their gross income the foreign earned income of such individual and the housing cost amount of such individual. Now, of course, there are limits on these amounts every year, and it's adjusted generally every year for inflation. So in 2021, the amount of foreign earned income you could exclude is up to $108,700. Okay, now the reason this is important is because U.S. taxpayers are generally required to report their gross income from whatever source derived and pay tax on it. Okay, so it doesn't matter where you're earning it from or where you are when you're earning it. If you're a U.S. taxpayer, you're reporting it and you're paying income taxes on it. So this is a nice little exclusion where you can actually exempt from gross income the foreign earned income amount. So what is earned income? Well, earned income is wages, salaries, or professional fees received as compensation for personal services, right? So you've actually got to be the one doing the work, right? You can't set up a company and have an employee do it on your behalf. You've got to be the one performing the personal services. And that earned income definition, that's within section 911. So you can look at 911 D2 Cap A. Now, foreign, what does it mean to be foreign income? Well, foreign income includes, amongst other things, compensation for labor or personal services performed outside of the United States of America, right? And so this definition of the source for foreign income, you can find this in 862A3. So 862 covers income from foreign sources, and then 861 covers income from U.S. sources. Now, the foreign earned income exclusion, in order to be able to take this, you have to meet one of two tests. Okay, so you got to meet either the bona fide residence test or the physical presence test. So what's the physical presence test? Well, the physical presence test, you meet this if you're physically present in a foreign country or countries. So it can be one or more countries. You just have to be out of the U.S. And you've got to be out of the U.S. for 330 full days during a period of 12 months. Okay, now the 330 days don't have to be consecutive. So if you're looking at a 12-month period, you can travel back to the U.S., or you can come back to the U.S. For vacation or even to work for a little bit. But the idea is if you look at a rolling 365-day period, you've got to be out of the U.S. for 330 days. All right, if you're not out of the U.S. for enough days, then you don't get this. You don't get the physical presence test. Now, the bona fide residence test is a little different. You can meet this if you become, quote, a bona fide resident of a foreign country. Now, this test is a little different in that you don't automatically get this simply by being in that country for a year. It's more of a facts and circumstances and case-by-case basis test. What they're really looking for is your intent for moving to the country, the purpose of your trip, the length of stay, all of these variables come into play. So it's not a hard line type of test like the physical presence test. So bona fide residence, for example, if you move to a country on a 1-year work permit and then your intent is to go back to the U.S., well, you haven't established bona fide residence in that foreign country, right? Because you're just temporarily there and then you're going back home, back to Florida, New York, wherever it is you live. So you need to be very careful on whether or not you qualify for this. Most taxpayers that are expats just claim the physical presence test because it's a more easily identifiable test, right? You can just count the days in the year and you'll know whether you qualify or not. So let's look at a sample fact pattern for John here, and then we'll go back to the form. So John is a U.S. citizen and he lives in Florida, and he takes a new job as a stock trader with a hedge fund in the Cayman Islands. All right, so John's going to start the job on Jan 1, 2021. So he moves in December, right after Christmas, a couple days before the new year. Now, John's going to be on a salary of $95K per year, and Cayman Islands doesn't have any income tax. So He's not going to be paying any income taxes in the Caymans, and this detail is relevant because The foreign earned income exclusion, taxpayers can either claim this or they can claim just the foreign tax credits. So depending on where you live, you might be better off not claiming the foreign earned income exclusion. You might be better off just reporting everything, not doing the 2555, and then taking a foreign tax credit on the 1116 for the foreign taxes paid in whatever country you live and work. So that's beyond the scope of this video. That's why I'm using an example where John is not paying any taxes in his foreign country. So now John lives the entire year in the Caymans. He only comes back to the U.S. once for vacation. So he's going to meet this physical presence test. He's 330 days outside of the U.S. All right, so let's look at the 2555 here. So this is the form itself, foreign earned income exclusion. There's a couple of parts. So part 1, general information, and then there's part 2, part 3, part 4, part 5, 6, 7, 8, 9, right? There's a couple of parts. So I'm going to go through these one at a time, discussing all the fields. But first, I'm going to jump up to page 1 so you can see kind of how the layout of the 1040 works. Broadly here. So we've got John here, taxpayer. His filing status is single. He's using his address in the Cayman Islands. That's fine. You can use a U.S. address if you want. It doesn't change the fact that you live in a foreign country. You just use a U.S. address for mailing purposes, so that would be okay. He traded some crypto during the year, so he's marking yes there. And you can see the layout on page 1. Now remember, John's salary is $95,000 a year. Those are his wages. So your wages, even though they're foreign earned income, they're still reported on line 1. Okay, so on line 1, you are reporting your gross foreign income or gross U.S. source earned income. And that's fine. So he still reports the $95K there. Now the software package that I use adds this FEC, foreign employer compensation here, and then amount of the total. So in other words, what they're doing is, let's say his wages were $200,000 and he had a mix of U.S. and foreign source, and then the foreign source was 95. It's just more information for the reader to be able to tell, okay, of this total gross amount, what portion is foreign employer comp? Not necessary, but this is just kind of a cosmetic thing that this software does. So then you can see he's got some interest income, dividends, and some capital gains. Now, what's important to remember is the foreign earned income exclusion is only applied to earned income, okay? So you can't use it to offset things like investment income. So if you have interest or dividends, capital gains, the foreign earned income exclusion doesn't offset those amounts. It's just your compensation, okay? So very important to remember. All right, so let's go back down to the 2555 and we'll go through the fields here. Okay. So at the top, information on the taxpayer here, right? So your foreign address, your occupation, and then your employer's information. So he's working for this fake hedge fund management company in Camana Bay, Grand Cayman, Cayman Islands, and then the type of employer, right? So this is truly a foreign entity. It is possible to take the foreign earned income exclusion if you're working for a U.S. company. That's okay. So if you live abroad under some, let's say, tourist or exchange program, but you're still drawing a salary from a U.S. company, you can still take the foreign earned income exclusion, right? Because the income is going to be sourced to where you're doing the work. So if you're living in Caymans and you're drawing a salary from a New York company, you could still claim this. And then you would put the U.S. employer here and indicate U.S. company, or perhaps a foreign affiliate of a U.S. company. But in this case, it is simply just a foreign entity, okay? Now, this is John's first year. So on 6A and B here, right, he's indicating that he hasn't filed this form before, and he has not elected or previously filed this to claim either exclusions, right? So we can jump down to line 7. Now, the reason why they ask this is you can't jump back and forth between taking the foreign earned income exclusion or just claiming the foreign tax credits, right? Once you elect to start using the foreign earned income exclusion, you have to keep using it each year going forward, unless you request permission from the IRS to change it. So that's why they're asking that, because what they want to do is be able to track, okay, well, have you used this before? Have you revoked the election? What's the current status? In this case, it's his first year, so it's a first year election for him. Now, line 7, he is a U.S. citizen. Line 8A, did he maintain a separate for residence for family because of adverse living conditions? No, right? So he hasn't had to exit the country and maintain a separate home for those types of conditions, right? He just moved to the Caymans for a job, and he's there on a work permit. List your tax homes and dates established. He moved to the Cayman Islands, and he established that residency at the end of the year, right? December 27, 2020. Now, part 2 here. Now, you complete either 2 or 3, right? So part 2 is for the bona fide residence test. We're not doing that part. So we're skipping that, and we're jumping to part 3, physical presence test. Now, remember, the physical presence test is based on a 12-month period. He moved at the end of December 2020, so he gets a full year 12-month period for 2021, right? So he can use Jan 1, 2021 through December 31, 2021. And the Cayman Islands is his principal country of employment. Now, if you traveled abroad, you should enter the dates and countries you traveled to, right? So he traveled to the U.S. from October 1st to the 5th, just for vacation, remember. Now, full days present in the country, you don't count the days you are traveling, right? It's only full days. So it looks like it's 5 days here, but it's really 3 full days in the U.S. And the number of days in the U.S. on business, 0. And 0 earned income. Now, part 4, this is where we start to calculate the exclusion. So the amount of foreign earned income he has, again, the total wage is there, $95,000. Now, there's a number of other line items here for employer-provided like fringe benefits. So if your employer is providing allowances for your lodging, meals, car, these things like this, generally, those are taxable fringe benefits, so they're included in your income. Under this exclusion, you can exclude some of those amounts if that was the case. This is a very simple example. None of that's applying here, right? John is just simply getting a $95,000 a year salary. So the total earned income there is going to be $95K. Now, it's asking us here, right? Enter the amount for line 26. Are you claiming the housing exclusion or deduction? No. Right, and again, we're not claiming that because his total earnings here are going to be well under the annual exclusion, and he doesn't have any employer-provided amounts either. So we're going to skip 6, and we're going to go right to 7 for the foreign earned income exclusion. Now you can see here the maximum amount, $108,700. This is for 2021. If you pull a 2555 from each year, this amount is going to be different, right? So it's updated each year for the new total capped amount of earned income exclusion. So in this case, he's got 108.7 available. The number of days in his qualifying period is 365, right? Because he was he's using the 2021, the full calendar year there, and he's got 365 days of qualifying days in the period, and so the total exclusion he's going to get the full amount. What they're doing here is if you move during part of the year, you might only have let's say half of the days can be part of your qualifying period, so you'll only get half of the exclusion. That's what they're after here. So in this case, because he moved in 2020 and he was outside the U.S. for all of 2021, then he gets the full exclusion amount. Now, the wages here, $95,000, falls well underneath the 108. So the total amount of exclusion that he's going to get here is $95,000. Okay. Now, this was also prepared with the return. It's a good idea to have this, especially if you're going to paper file it. But what we've done here is we've continued to indicate that, look, this is a foreign employer. Services are being performed not while residing in the U.S., but while in the Cayman Islands. And so this is more information on the foreign company. Now, the $95K that's excluded, ultimately that will flow up to, bear with me here, okay? So we're going up to Form 1040, page 1, Schedule 1. So on Schedule 1, line 10, you're going to have foreign earned income excluded of $95,000, and then that's ultimately going to flow through here to line 8. Let me go back. I must have skipped over it really quick. Oh, there we go. Okay. So Schedule 1, additional income and adjustments. So this is where you report, again, in Part 1 and 2, additional income or adjustments to income. The Part 1 additional income, the amount of the foreign earned income exclusion is going to be reported here, right? So line 8, line or 8D, and this is the 2021 versions of Schedule 1, right? It seems to change every year. So in 2021, we got other income, foreign earned income exclusion, 95K, and then ultimately that, again, is flowing up here to page 1 of the 1040, line 8. So we can see we're reporting it, the gross amount here, and then an offsetting entry. So now the only total income left is the investment income. So he's got capital gains, interest, dividends. He still gets his standard deduction, right, even though he lives abroad. So you can see here how the standard just wipes out all the other investment income, and his taxable income is 0. So this is an example of how the foreign earned income exclusion can help you save a significant amount of income tax if you are living abroad and you qualify, again, for either that foreign earned income exclusion under the physical presence test or the substantial presence test or the bona fide residence test. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, please feel free to leave me a comment below, and I look forward to seeing you again on the next video. Thank you.